Welcome you all for the course Banking Theory, Law and Practice. The topic of this session is relationship banking. The relationship banking is a new trend and development in the banking terminology. It say about the banking relationship, bankers' relationship with the customers in a modern terms. That's why we need to understand what are all the relationship and what are the activities done by the banker for the benefit of the customers, which we are going to see under the new term relationship banking. The relationship banking can be defined as a process that includes proactively predicting the demands of individual bank customers and taking steps to meet these demands before the client shows them. The basic concept of this approach is to develop and build a more comprehensive working relationship with each and every client, examining his or her individual situation and making recommendations for different services offered by the bank to help develop the financial well-being of the customer. So this is by all means favorable to customers and to do some favors for the benefit of the customers. This approach is mostly linked with the smaller banks that use a more personal approach with customers. Even though an increasing number of large bank corporations are beginning to motivate a similar strategy in their local branches. At the base of relationship banking is the thought that the foundations and the individual customer are partners with the goal of developing the financial security of the customer. Due to this reason, the client support representatives within the bank are frequently pursuing to acknowledge what customers like and don't like about the services offered by the bank, how they are presented, and how to identify the services that are likely to be beneficial to each customer. This type of proactive approach is completely different from the reactive approach used by many banks over the years, in which the bank critically builds its suite of services and the qualifications for acquiring them, after which it waits passively for customers to approach them. With relationship banking, the representatives of the foundations don't wait for customers to come to them. Instead, they go to the customers with a plan of action. Improving customer relationships. See, we cannot expect active participation from the customer side in a day or week or a month. It is a base level of building a relationship that needs trust, dialogue, a steady growth in service, ownership, and a growth in share of wallet if done correctly. If all the things are correct and rendered the services positively for the benefit of the customers, the relationship will be built in. The substitute to concentrating on establishing customer engagement. The substitute to concentrating on establishing customer engagement is a relationship that does not satisfy its full potential or customer attrition. Once you want to satisfy the full potential or customer attrition, there should be a improved relationship, right? Most of the researchers suggest that the concrete advantages of a completely engaged customer who is attitudinally loyal as well as emotionally attached to the bank is very important, for which some of the following measures can be followed to build and enhance the relationship with customers. What are they? The increased revenues, wallet share, and product penetration. Customers who are completely involved bring in additional revenue per year to their primary bank as measured with those who are actively not involved, and 10% greater wallet share in deposit balances and 14% greater wallet share in investments. The completely involved customers also average additional product categories with their primary bank than do customers who are actively not involved. This will increase the revenue and also the product penetration among the customers. Higher purchase intent and consideration. Actively involved customers not only acquire more accounts at their primary bank, but also look to that same bank when thinking of future requirements. Nowadays, when almost everything is done online, developing banks' chances of being in the customer's consideration set is essential. So that higher purchase intent and consideration must be considered while building the customer and bank relationship. That means the relationship banking system. Becoming a financial partner, less concrete but no less important. It is not static and it is not also forcible, but it is not more to be concentrated but not also less important. So, an actively engaged customer establishes a settlement with their bank or credit union that every financial foundation would covet. We have seen how to improve customer bond. Another major aspect is to understand the guidelines on how the bonding with the customer can be made stronger. This can be done in the following ways. Improve acquisition targeting. This does mean customer engagement begins even before a new customer opens an account. The advanced technology today makes it possible to find new prospects that are identical to the best customers who have their accounts at a financial foundation. The creation of an acquisition model that monitors the product usage, financial behavior, and relationship profitability. Opening accounts with limited potential for involvement or growth is minimized. Change the conversation. Let us say breaking the ice or starting a communication or interacting with the customers is one of the key elements to building an engaged customer relationship. Of course, the engaged customer relationship is the end result of this process. So that to build the good relationship, we need to break the ice, starting a communication. We need to interact with the customers. We should approach the customers for each and every benefit of the customer and also pave way for the development and growth of our banking activity. This relationship bonding starts with the conversation during the process of account opening. To develop trust, the conversation must stress on confirming that the customer believes that you are genuinely interested in knowing them, are willing to look out for them, and after due course of time, they will be rewarded for their business or loyalty. This initial interaction requires concentrating more on capturing insight from the customer and figuring out the value different products and services will have from the customer point of view as opposed to simply considering the features. The aim is to demonstrate to the customer that the products and services being sold must satisfy their unique financial and non-financial requirements. Unfortunately, the research shows that most of the branch personnel have problems in dealing with the customers around requirements and the value of services provided by an enterprises. Value of services provided by an enterprises. In simple words, having an enterprise grasp of product knowledge is not sufficient. Initially, the enterprise should concentrate on sales quality as opposed to sales quantity. Some financial foundations have started using iPads to collect insight directly from the customer. While seeming less personal, an iPad new account questionnaire sets a standard collection process and basically is able to collect far more personal information than the bank or credit union employee are comfortable in collecting. Communicate early and often. It is quite alluring how banks and credit unions set goals and objectives for broadening a customer relationship and involvement and then build arbitrary rules around interaction frequency and cadence. It's not uncommon for a bank to minimize the number of interactions to one a month or less in spite of the fact that a new customer who is expressing the desire for more interaction as part of their new relationship. Research suggests that the optimum number of interaction messages within the first 90-day period from both a customer satisfaction and relationship growth point of view is 7 times beyond different communication channels. Personalize the message. Studies show that more than 50% of actively involved customers get mistargeted interaction. Basically, this involves talking about a product or a service the customer already possesses, or regarding a service that is not inciting with the insight that the customer has in mutual with the foundation. Presently, customers expect well targeted and personalized interacting sessions. Anything less than this makes them lose their trust on the banks. So, anything less than this, so that all banks are to be very careful. They should not come down from the benchmark of interacting session. Otherwise, it gets lost of the customer's attraction, and customers will lose the trust on the banks. This is mostly true with the financial services, where the customer has provided very personal information and expects this insight to be used only for their benefits. To establish proper engagement, it is best to involve service sales grid that reflects what services should be underlined in interaction given present product ownership. Involvement communication is not a free size that fits all dialogue. It should show the relationship in real time. Then, build trust before selling. Build trust before selling. Before selling your product, you should attract the customer, and you should build the relationship between the customer and yourself by building the trust block on the minds of the people, on the minds of the customers. Once you built in strongly and heavily, unbreakably, the trust in the minds of the customer, it will definitely not get deviated from your services. So build the trust before selling your product, selling your service. To establish proper engagement, it is best to involve service sales grid that reflects what services should be underlined in interaction given present product ownership. Involvement communication is not a free size that fits all dialogue. It should show the relationship in real time. So if a customer opens a new account, then the services that should be discussed are as like what I am going to say now. What are all the services that you offer for each and every customer when they open an account? Direct deposit, it is one service. Direct deposit that can be obtained. Online bill pay, whatever the bill the customer wants to pay, that can be paid by the bank through the online bill pay mode. UBPS, utility bill pay services and all. Online banking, the customer will be allowed to do online banking. Mobile banking, customer will be allowed to do mobile banking services, use the mobile banking services. Privacy protection, security services and benefits. These are all the points that are to be covered as a services which are to be given to the account holder once he open the account. Acknowledging the customers beyond additional enhancements to a checking account that can further help in constructing an engaging relationship involve mobile deposit capture, rewards program, account-to-account transfers, P2P transfers, electronic statements, notification alerts. These are all further services. And along this relationship growth process, supplementary insight into the customer's requirements should be assembled whenever possible with the personalized communication expressing this new insight. The next is reward engagement. Unfortunately, in banking, the concept of if you construct it, they will come doesn't work. If you construct it, they will come doesn't work. While we may construct great products and supply new, innovative services, mostly customers need supplementary motivation to utilize a product optimally and for engagement to grow the way we would desire. The outcome is mostly proposals that are required to provoke the desired behavior. In the development of proposals, banks and credit unions should make sure that the proposals should be established on the products that are already held as opposed to the product or service being sold. Exclusively in financial services, a customer doesn't completely understand the advantages of the new service. Thus, if the new account is a checking account, the proposal should be one that limits the cost of the checking, supplies an extra benefit to the checking, or strengthens the checking relationship. So, there should be a reward engagement in that way. Potential proposals may involve waived fees or optimally improved stages of rewards for a precise action or limited duration. The advantage of using rewards would be that a reward program is a strong engagement tool itself. Geared to the mobile customer. We know direct mail and phone are highly effective methods used for constructing an engaging relationship. Phone and mail. The use of email and SMS texting has led to progressive outcomes also due to mobile communication consumption pattern because of increasingly complex mobile communication pattern. Recently, the reading of email on mobile devices exceeded the desktop consumption and highlighting that most messages should be geared to a consumer who is either on the go or multitasking or both. Of course, everybody is doing multitasking today and reading out all the mails using their mobile phone, not searching for or not taking the desktop. Just on the go, they will do everything using the mobile and reading the emails as well as the messages, replying for the same, acting according to it. All these are happening so that the relationship is now built in technologically. To interact with the mobile customer, email and SMS texting must be a point-to-point, that is one-on-one conversation. The customer does not wish to know everything about the account. All that he wants to know, only the balance and availability of credit and debit, is what is in it for them and how do they react in the rest. As links should be used to support the supplementary product information, if it is required a single click option that should be available to say yes. With respect to these links, many financial foundations have found that using short-term videos is the best way to produce understanding and response. So that they have started preparing the short-term videos and posting them into all the banking sites for the purpose of making understand the customers. And today they are all having the new system called virtual response and virtual support. With respect to these links, many financial foundations have found that using short-term videos is the best way to produce understanding and response. Brilliant videos around online bill pay, mobile deposit capture, and A2A, P2P transfers not only educate people but immediately link to the yes button to close the sale. It is very necessary to remember that the video should be short like under 30 seconds and constructed for mobile consumption first when using educational sales videos. As a video constructed for mobile will always play well on a larger devices. The opposite is basically not true. Mobile screen needs to be focused more as nowadays everything is done on phones itself. And it is not possible to carry a desktop everywhere or laptop everywhere. You can carry your mobile phone with all configurations required for the operation of SMS, app, internet or any other banking services. All customers will be making use of all the services, of course, at least a few services of the banking activities. Also, the customer will not always bother to check the links and videos in their desktop, so that they will tend to learn whatever be posted by the internet banking company to build the relationship. By means of this, the bank definitely will come forward to build the relationship of the customers, and reciprocally the customers will also tend to do it, so that the positive and favorable relationship will be built in, and bank will also earn along with the reputation their objective profit or their aimed profit, whereas the customers will get benefit of banking activity and they will grow with the savings and all the support of the banks. With that, I would hope all of you have understood this concept, which is a modern terminology used in the recent developments of banking sector. All the best. Take care.